Our industrial relations watchdog, the Fair Work Commission, is dealing with the new reality of how actively Australians use social media. It's considering the dismissal of 3 postal workers who were found to be exchanging sexually explicit material in the workplace. Here to discuss the consequences of employees' use of social media is Joydeep Kaur, Managing Principal of specialist law firm People and Culture Strategies. Joydeep, great to see you as always. Thanks for coming in. Just firstly, tell us a bit more about this case concerning the postal workers and this decision by Fair Work.
Yeah, so this was a decision handed down by a full bench of the Fair Work Commission only 2 weeks ago. In it, the full bench found that the dismissal by Australia Post of 3 long-standing employees for accessing and storing pornography on the Australia Post electronic communication system was in fact unfair. And it's a very significant decision because for a number of years now, the Commission has had a reasonably consistent view that that's a no-no in the workplace. Employers who do take what's called a zero-tolerance approach to the use of pornography at work are well within their rights to dismiss employees for it. So what the full bench is saying here is that without condoning that particular type of behaviour at work, that employers still have to regard the overall circumstances of the employees, and in this particular case the fact that they were long-serving employees, the fact that dismissal would have a very serious impact on them, on their livelihoods, families, income earning capacity, etc., rendered this particular dismissal unfair. A very curious decision, I think many people would say, and a lot of employers would certainly be scratching their heads and saying, where are we entitled to draw the line? And that's where the social media piece becomes very interesting, because what is happening, as so many employers know, statistics suggest something like 40% of Australians are actively using social media while they are at work. And what I'd imagine is that a very small percentage of those would have a legitimate work-related use to use social media. So whether you're uploading things to Facebook or Twitter or LinkedIn or whatever, it's pretty likely that you're going to be doing that for personal purposes. So employers have been struggling with this for a while, and this case, I think, is just going to serve to remind them that the boundaries are certainly not clear.
So there is a sense that perhaps the Fair Work Commission looks at misconduct involving social media and the internet. It deals with it differently then? Well,
it shouldn't. I think what this decision is trying to say is that you shouldn't look at social media or the use of pornography or inappropriate internet surfing or whatever it might be as a standalone category. You need to treat it as you would any other types of misconduct. And what they mean by that is that the mere fact that an employee has engaged in conduct or appears to have engaged in conduct doesn't necessarily mean that dismissing them for that conduct is going to be fair. And there are some well-known cases in a safety context, for example, where an employee that refused to wear safety goggles who was dismissed, the employer found that was an unfair dismissal because the personal circumstances of the employee weren't taken into account. So employers need to just be very circumspect, even in the cases that most employers and the employers that we talk to regularly and work with would say, well, surely misconduct has got to be the easiest basis on which we can effect a termination, because it's objective, it's black and white. The employee's either done it or hasn't done it. Performance is a bit more subjective, whether someone's a good cultural fit, all of that kind of thing is more subjective, but surely this is black and white.
So what should employers be doing? Making sure they've got a really good social media use policy in place? I mean, how do they communicate?
They've got to have very clear policies, but one of the things that really undermined Australia Post here was lack of consistency of treatment. And I think a really clear message for employers is having the policies is one thing, but actually properly enforcing those policies in a consistent manner and not being compromised down the track where the dismissed employees can say, oh, but hang on, what happened to that individual who didn't suffer this particular consequence is going to be just as important for the employer.
Joydeep, really appreciate your insights. Thank you so much for coming in.
Thanks,
Joydeep Kaur there from People and Culture Strategies. All right, let's return to the markets, and a reminder of what we saw on Wall Street, a rally as the Fed decided not to taper. Surprise decision, sending the Dow and the S&P 500 to record highs. Let's find out what's going to happen for our market. CommSec economist Savant Sebastian joins us now. Savant, just firstly, I mean, take us through the reaction that we saw offshore.
Yeah, Bridie, it was certainly a very surprising move by the Fed to keep its stimulus program, bond buying program, at $85 billion a month. It sent a huge reaction through markets. We saw the Dow, which was down, closing up 147 points at record highs. Even the S&P 500 reaching a fresh record high as well. And it wasn't just equity markets that reacted to this. We saw the movements across the board in terms of commodity prices. The Aussie dollar as well, receiving a boost, getting up to 7-month highs. In fact, the US dollar falling against the entire currency complex. The Aussie now trading around 95.25 US cents. And more importantly, those US yields sliding overnight. In the last couple of days, they're down by about 30 basis points. The 10-year seems to suggest that the US Federal Reserve was worried about what was taking place in terms of longer-term interest rates. And that was the key driver, I think, of the Fed effectively deciding to keep the stimulus in play, at least for the foreseeable future.
Just what is your expectation then for how our market's likely to open?
Well, the SPY's point to gains of about 60 points at the open. Now, if we look at the US market, it really was material stocks that drove the rally. We saw industrials and materials significantly higher. That weaker US dollar is certainly putting some upward pressure or upward strength on the commodity complex. The gold price in after-hours trade rising by over $50 an ounce, or 4%. So I think domestically material stocks will receive a boost. We saw home builders in the US also receiving a strong boost.